All right, man. That's just, I'm having a little fun there with that intro. Hey, man. Yes, 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 yes. Gerald Peters. Appreciate you checking out the video. This is everybody who's receiving this. I really do appreciate you at the bottom of my heart. You're going through our trade of the week, where I try to narrow down what I think are the three easiest trades for that week. And I feel like we did pretty good last year in 2024. Obviously, going to try to do better going forward. This week, I don't want to force anything. There's a few out there, but I think anytime you get a pullback like this, right now, this is just a structured stage 4 decline. It's not a crash, you know, it's just a correction. And some of this is technical, some of this is funds taking profit, some of this is the new administration, new presidency. There's a lot of uncertainty going on right now, but it's normal. There's nothing to worry about here. These are learning experiences. What did you learn in this correction? If you're trading like these swing trades, if you're using stop losses, then get out. Most of my trading is what I call position trading. Same rules as a swing trade, except I won't use stops sometimes. Pulls back, I'm looking to add shares. I'm going to sell it down the road. Like I did that with Uber, bought it in the 40s, bought it in the 30s, bought in the 20s, bought it in the 14s, end up selling in the 80s. Well, that took 2 years. Warren Buffett in the Berkshire portfolio takes 5 to 7 years to fully build his position. That's how long it took him to build his famous legendary position in Coca-Cola. It was, I believe, 7 years. Sometimes as a retail trader, you're in it and you're expecting it to go to the moon right away. So we need to lower the expectation of return at fast. Obviously, trading is fractal. If you lower the time frame in trading, things are moving faster. Let's pull this up for just a second. Let me show you an example. You should see right now a chart of Bitcoin. This is a 1 minute chart. And so I've been tracking this since I started preparing to do the videos over here. And so we're pretty much in a stage 1. And what we're talking about today is going to be right here, anchor points. And that's what we're going to talk about. But this is anchor points happening in real time. An anchor point as opposed to an apex point. Anchor, think of lowering an anchor in the water. Boom. It goes to the bottom. That's the anchor. It allows you to, this gives us a tradable point. This gives us a zone we can use for stop losses if you want to use stop losses. And you might compromise. You might hold half the position, but get stopped out of half. That way you have liquidity going into the sell-off. That's something you're going to have to work on that'll work for you, simply over time. Okay. Here, we'll turn this off for a minute. I did think, let me see if I should see me on there. When is this? Man, this is like 5 years ago. So don't be too hard on me. Watch this part right here.
I put some out. People buy them. We conversate. 5-6 months later, I've sold them all. Put some out. We conversate. And it allows me to refine my system, like sharpening a blade. You don't need a new sword. You just need to put an edge on it. And so it's helped me explain to people by doing this. And it's actually kind of helped me internalize it. Because there's some things you begin to, if you do it long enough, you're kind of doing it intuitively. If you played golf for 20 years and you're pretty good at it, you're probably not really paying attention to every little sport. And this is the found.
Sorry, hold on.
Even if you watch my other videos, the market moves in 4 stages. Stage 1, sideways, and this is important. This is the foundation. This is like saying, if you're going to be a Christian, you got to believe in Jesus. This is the Jesus of the stock market.
I don't know why I said that.
No disrespect to anyone that believes in Jesus. Stage 2 is the breakout. Stage 3 is where the market tops out. Stage 4 is where the market breaks down. Now, all the action is happening here and here. These are the action points, stage 1, stage 2. Now, I'm going to show you how.
Now, listen. Stage 2 is going up. Stage 4 is coming down. A 2 is a 4. If we flipped them upside down, they're the same thing. Same as a stage 1 is a stage 3. So as soon as you can define a stage 1, the opposite defines a stage 3. We want the RSI extreme. We want it extreme on the bottom for the 1. We want it extreme at the top for the 3. Price starts to go sideways at the bottom and the top. Price drops below the 5-day exponential moving average. The trigger does it on the bottom going up and on the top going down. Man, let's pull this back up. I hope you get that.
I discover how I find for me, there's a lot of ways. And people, here's the thing. 2 very smart people can disagree on where the stage is and where it starts. As long as you're consistently doing it, that's the most important thing. If you've ever played blackjack, you know, the one card that everyone disagrees on is, what do you do with a 12? Do you hit it or do you stay? If the dealer has a bust card and you have a 12, do you hit it or do you stay? Because if you hit that card and you get a 10, everyone's going to be pissed at you, right? But statistically, the chances are you're not going to get a 10. So whichever you do, you should do it every time. And that's part of the key to trading, is trading consistently, being consistent, doing the same thing every time. And that's where financial news will get into your mind. 4 things are going to steal your money: debt, taxes, inflation, corporate marketing. That's corporate marketing. So if we understand that the market moves in 4 stages and we learn to identify stage 1 as sideways, they call this accumulation. The theory is that when it's moving sideways, funds, mutual funds, retirement accounts, hedge funds, big traders are slowly accumulating shares. When the news gets out or something happens, it breaks out, price moves up. This is where a lot of us get in. This is actually what I'm looking for. Breakout. This is the best time for a trader to buy. Best time for a trader to buy. See, if you're a real estate investor, you don't want to go into a boring ass neighborhood where nothing's happening, nobody has a job, and it's all just.
Now, something I'm going to say on that, I have changed my view on that as I become better and better at trading and better at timing the stage 1s. Actually, I think taking it at least some of the position on the stage 1 will have an exponential return rather than waiting on the stage 2, and the losses tend to be smaller. So I tend to accumulate all of my position now in the stage 1. When it breaks out, I'm rarely adding. You could, and then it runs, and you can see how, in my opinion, if it's going to go 1, 2, 3, 4, and it looks that way, and we can see the pattern, the safer time to load up is actually stage 1. But a lot of the book, the Money Flow, talks about stage 2, and that's fine. Okay. Now this is page 10 of the Peters report, and I'm sure all of you get that. A lot of people don't know the beginning and a lot of the charts and the videos and all that. I work on that on Sundays, and when I have my homework done, it's at the very back, right? Page 34, and you'll see my board. So Saturdays and, some Saturday, but Sunday's my homework day, man. That's when I'm doing the most work. And it is around this concept of the money flow and the 4 stages of price movement. But you got to understand it. You got to beat this into your head. Repeat it over and over until it becomes a working, living philosophy. The stock market goes up as much as 71% of the time. The problem is it's not a straight line. Prices can only do one of 3 things: move up, move down, move sideways. I believe prices do this in 4 stages. By identifying the stages, we can better allocate our buys to take advantage of sell-offs, i.e. stage 4, which we're in right now, and maximize price increases to take profits during stage 3 distribution zones. So we're talking about this, and then we're talking about, so the stage 4. So the anchor is where the 4 and the 1 coexist. It is where they cross. U.S. stocks have been having a rough go of it lately, but history shows that investors who have the temerity to buy when the market is falling are often rewarded, provided they have the patience to wait out further weakness that might follow. He said they did some studies all the way back to 1950, and it says that they have identified 128 instances where the S&P 500 retreated by 5% or more, falling from a 3-month high. Most of the time, investors willing to risk it and buy these pullbacks were quickly rewarded. However, more than 40% of the time, the dip snowballed into a correction or something even more serious. Of the 42 corrections, they found nearly 60% went on to become serious corrections. This appears to be a major tipping point because once a sell-off entered serious correction territory defined by them, the pullback was between 15 and 20%. Not that bad if you ask me. Now, let's see. The anchor point is this right here. All right. So all we got to do is identify the stages. Now we know this is a stage 2, keeping it simple. Why? Because all of the action is on this side of the green line, right? That's stage 2, right? Simple as that. Stage 4 is what? All the action is on this side of the green line, right? Does that make sense? So when you're looking at this, over here, the green, that's price on that side of the 20. Over here, that's price on that side of the 40, okay? Stage 2 up, we'll make money going up. Over here, you could hedge it, sell it, go short, whatever. Or just step aside, or just wait and write it down. And the best time to come in is down here on the anchor point, right? I hope that makes total sense. So let's go back to what I was saying. All right, we'll clean this up. Save changes? No. Now, in this scenario, and this is short and sweet, keeping it simple. If we have identified this, if we've identified this as stage 2, all right, now we don't have much of a sideways here, but we do have price going below and then boom right here. So now we can call this stage 3, okay? We know this is stage 4 decline because price broke the 20. Remember we said if price is on this side of the 20, stage 2. If it's on this side of the 20, it's stage 4. And we can see what appeared to be somewhat of a box, and it broke it, okay? So what are we looking for? Well, we know it can't go stage 2 unless you see how these moving averages came together. You can see where it's right there. And then look here. Well, price can't go up. Price cannot go up if there's not a crossing, right? Kind of like moving average convergence, divergence. It can't go up without the moving averages coming together, okay? But we can look for other things. We can kind of see it here. Red, 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 red. All of a sudden, we have a black candle, right? So boom, right there. That is a possible anchor point. Anchor point is the lowest low on a structured move down. You're going to get different headphones. Whenever I pull those out, it's so loud in my ear, dude. So what do we need to see now? The RSI, that's the 7, this is the 14. We use that mostly for day trading or very short swing trading. I need to see that go extreme. That's a check. We had a structured move down. That's a check, right? What? The money flow itself, the money flow indicator went extreme. It tends to do that at tops and bottoms, okay? Did it here. Look at the histogram. It turned. We need to start to see the curl on the TSI. And then we're going to have a bottom that we can play on. Come on, man. Let's see. Well, we marked it also. Now what are we seeing? Boom, boom. So this bar here, it's going to let me mark it. I don't know why it does this sometimes. So anchor, and we got 1, 2. Man, I'm buying right here. I'm going to jump it if I'm looking to buy. And then I've got to realize I'm going to run into resistance. Did it again. I have to start running those below my shirt. I'm going to start running into resistance because previous support becomes resistance. You know, that's just basic money flow chart analysis. We're trying to make chaos or order out of chaos. My new book coming. Okay. So if we can count, we can identify the anchor point and the stage 1 accumulation point. So all it is, now the lower time frames can get a little more difficult, but it's like, okay, once it breaks, it's like, is this the anchor? Could be. Let's wait and see. Is everything on extreme? No. What's the next one? Boom. No, it went down. Okay. Is this the anchor? Well, that one held it and then it was red. We need 4 bars though. But we need 4 bars or 4 candles. We can do 3 if the third one is closing above the 5 exponential, the little red dotted line you see on my chart. You don't have to have dots, but I do. That's the trigger. That's the alert. So that'll allow me to identify the anchor point. And then what? To see price break above is what we're seeing over here to the right. You know, and so then as it comes around, okay, is this the anchor? Well, next bar holds it. So far it is. Next bar holds it. So far it is. Next bar gets above the 5. So now we have an anchor point, which gives us a support zone. So right here is the zone where I would, if I'm going to do stop loss, I'm going to do it right around in there. Okay. Right below the identified anchor. Okay, and there's our trigger, price entered. And so what are we hoping for? Full-blown stage 2 run. But what did it do? It gave out. And what happened? You know. Now, do you have to let this be your stop? No. You know, you could put in some rules that once your trade takes off, you know, you could have rules in there. Once your trade takes off, you might raise it up to even, because once you go stage 2, that's what I was saying over there. Let me see if I can put this back on. If I'm waiting just for the breakout, I mean, the breakout's happening here, man. And so I can't use this far back, right? So there's some adjustment. Now, this is a Bitcoin chart that's active right now. So this is a way to practice. Anybody can practice like this. So what? There's my anchor. We did this in real time, guys. There's the curve. We got the sideways curve. MACD rolled over. We're coming out on the thing. So right now, look, everything is pointing up. And our entry was right there. Remember we said we thought we'd run into problems. Remember I said that? I thought we'd run into problems right here. Well, look where it stopped. Come on, man. It stopped exactly where I just told you it would not 2 minutes ago in real time. And that's exactly what it did. So it's going to make a couple runs at this. If it gets through, I'm going to assume it goes to this thing. Now that's going to push it up. So I'm going to probably be looking to take some profits because the 7 RSI is going to hit. Does that make sense? Man, I hope that makes sense. I didn't want this to go too long. Anchor points. If you get red bar, red bar, red bar, red bar, red bar, don't buy any of those. Wait. It will stop. At the very least, buy that one. But I prefer to let it stop. Let it confirm with either the 3 bars and the break above the 5 EMA or 4 bars and then a break above the 5 EMA. Boom. Now I got a tradable bottom. I can call it the anchor, and I start getting some money in. Hopefully beat the stage 2 breakout. Let it run up. Use the RSIs, market structure, and the market is always building itself out, man. Hey guys, I love you, man. If you're not trading with me in Discord, if you're not on my alerts, some of you guys are just doing my trade of the week. That's cool. I appreciate that. But if you want to get inside our Discord, work, closer with me, there's my phone number, 936-661-7786. I appreciate you being on the trade of the week, man. We put a lot of research and study into it. It's not us just randomly picking stocks, I assure you. And your feedback's always welcome. I was doing videos for all the trades. It didn't seem like that was that important to everyone. So, but hey, let me know, man. I appreciate you.